Hello, welcome everyone, and welcome to my channel. If you are brand new to my channel, please subscribe, like the videos, and go ahead and turn on those notifications so we can go ahead and get you awesome videos like this as soon as they come out. So this is the video where I'm really going to talk about more how you can make money in the market. How does it work, right? So if you checked out my other videos, you might say, Jane, this is awesome. I love your stuff, but I don't get the basics of it. Well, if you guys are hungry for more than even just these little videos, come over to the training pit. We will go ahead and help you guys learn everything you need to profit in the market, learn about trading around the dark pool, and a lot of other great things. So come check out our community. But back to how does it all work? How can you make money in the market? Okay, so we have the shares of these companies, right? And these companies are traded on the exchange. So say you want to go ahead and you have this idea, I'm going to go ahead and I'm going to start trading no matter where you are in the world, the US, the Canada, you need to go ahead and find a broker first that you're going to trade with. There are some bigger name brokers. There's some brokers that just work on apps on the phone. So definitely do some due diligence. I will talk a little bit more about different brokers in another video, but definitely go ahead and due diligence in finding out a broker that you want to trade with. So step number one, open up an account with a broker. Step number two, if you are in the States, see if you are going to open up a margin account or a cash account. There's going to be differences that will happen with both of those. And so I will break those down in my cash or margin account video. But the basics, open up an account. Then you want to go ahead and be able to buy the stock. If it's a cash account, you are only limited to going long. Margin account, you can go ahead and short or sell the stock. So how you can make money in the market is buying low and selling when the price is higher, or you can sell high, borrow those shares from your broker, and then when the price drops, you repay those shares by buying them back and giving them to your broker, and you keep the difference of what has happened. So say for argument's sake, you go ahead and you buy Disney at $100, right? So you buy 100 shares of Disney at $100, $10,000 investment. Now, Disney goes up to $105. So it's had a $5 move, right? You sell your 100 shares of Disney at $105. So you get to keep the difference between $100 and $5 for those 100 shares. So that's $5 times 100, which would be a $500 profit, right? Hopefully you guys all get going long. That would be buying low and selling high. It's also called going long. Now, maybe you see, my goodness, this stock is going to drop. Maybe something like Tesla, right? So you say, all right, Tesla's not going to stay up here at $1,000 for this example, right? So you short 10 shares of Tesla, and Tesla is at $1,000. So then in essence, you have $10,000 position that is short. Again, you don't have these shares in your account. So what you do is you sell to open, and I'll cover all of the tickets of opening and selling and all that sort of stuff. But you would sell to open 10 shares of Tesla at $10,000. Excuse me, at $1,000. That's $10,000 position total. You've borrowed those 10 shares from your broker. So in your account, it would show up as -10 and the price that you enter. So that would be $1,000, right? Now, Tesla drops down to $700. You say, yes, it's dropped. This is awesome. Okay, I'm done. I want to go ahead and close out my position, right? So you go ahead and you buy back those 10 shares of Tesla at $700, which would be equal to $7,000, right? So now you have those 10 shares in your hand, so you give them back to your broker, right? And you now have the difference between the 1,000 and 7,000, excuse me, 700. So difference between 1,000 and 700. So that is a $300 difference for 10 shares, right? So you, in essence, have made $3,000 on the way for the stock going down. Now, sometimes people still get confused in what shorting is. So again, you borrow those shares from your broker. In your account, it would show up as negative 10 shares, and then you would have a positive of $10,000 in your account, right? Because you've sold something and you've borrowed them. It's kind of like a mortgage for a house, right? You borrow that money for the mortgage from a bank, and then in return you get a house. Well, in this scenario, you are borrowing the shares and you get money, right? So once you go ahead and you buy those shares, you give back the money to the broker, and you receive the 10 shares and you give them back those 10 shares, and you're left over with the difference. As long as the price is dropping, you are making a profit. If that price were to have gone up to $1,100, you would then owe your broker $1,000. So you do want to be very careful when you get into shorting, and knowing that losses are unlimited, because stocks could go up as high as possible. When you are going long a stock, your loss is limited to your investment. So there are different risk tolerances as well, and you need to be prepared that if you were to short a stock and it does go against you, that risk of it getting squeezed, as they call it, where it goes up higher and higher, could be unlimited, because there is no reason for that stock not to continue going higher until people start to sell it. All right, guys, I hope you like this informational video all about how to really make money in the market going long or going short. And stay tuned for the cash versus margin account, as well as how to put in your orders. All right, see you soon. If you have any questions, email me at jane@cjanetrade.com. Bye.